Here we go. There we go. All right, Greg, how do I hit the mute button? All right, as
The
long as
mute button? Oh, on the top, if you're using Chrome, on the tab, right click on it and
well, I don't hear myself, so as long as it,
no, we'll hear you. It'll double.
all right, on Chrome. Got it. Chrome, keep going.
On the top, right click on the tab and press the mute button where it says mute.
Well, I don't hear my. Got it. All right, cool. Let's go. Hello, YouTube. Greg and I are here in the green trading room, and this is what we do pretty much every day on earnings season in the afternoon. We assess the market, we look for earnings trades after the bell and in the morning, and we look to see if there's any setups that we would consider selling credit spreads on or naked options, or doing a directional trade, speculating on a directional move based on the chart into earnings. So we're going to show you that in real time right now. We have a checklist that we go through, and I'll obviously walk through that with you. But we always start with a let's just get a situation of the broader markets right now. So this is the spiders. I mean, here is a bullish breakout. So I probably would have been had a more bullish stance on earnings trades. At the end of this bar, 727, this is just the broader market. It has nothing to do with the individual stock. I'm just saying we start with this. So now we've had a big run. We're at resistance. So I'm a little bit less lenient, if you will, of giving negative earnings not getting crushed. Like ever since this bottom, our traders in the green room have heard me say, look, I think we're in a bullish mode. I think even bad earnings are not going to get crushed, as much as they would in a bearish sentiment. All right, so that's the broader market. And so what I've done already, I go to NASDAQ.com. There's a beautiful website there that shows the earnings after the bell, the ones in the morning. And I typed a bunch of them here already, so we don't have to do that. And you're going to watch Greg and me go through these together. We're technical-based traders. Some traders say, oh, all options are overpriced into earnings, just short calls and puts on both. And, they have no directional bias. Greg and I say that's like an ostrich. It's like putting your head in a friggin' hole and hoping that you come out, with your pants on the next day. I've been doing this for 20 years, but just in this particular earnings season, I mean, I'm ballparking it. I need to go get real data, but I'm like 20 for 22, something like that, 20 for 23. And the beautiful thing when you sell overpriced options into earnings is because of the volatility contraction, you still can make money unless you have a catastrophic gap. I'll give you an example. Airbnb, I sold puts on this yesterday. I sold the $100 puts, just the same exercise that we're doing right now together. I sold the $100 puts. Again, I forget, I'm a bad record keeper. Something like 90 cents. I have a pretty good memory, but not to the penny. So I sold them at 90. And when it started rallying this morning, I got out at 30 cents. So I made 60, 70% of max value, even though it went against me. But let's focus on new trades. So there's plenty that have gone against me, and I still make money. All right, so let's start with booking here. I'm not going to even look at booking, but we start with a technical pattern. Is this a pattern that I would want to speculate on? Bullish, bearish, or neutral? Buying options or selling options? That is the very first question to us as technical based traders. Actually, let me give you one that we did yesterday, just to, you know, show you a fantastic setup that we did, and we gave this one to our subscribers. So here's a daily chart of RNG, ring. You know, the weekly chart was over $300. This is in a nasty, 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 nasty downtrend. And it had a bullish engulfing bar on volume on major supports. Look at this monthly chart. It was 450. I said 300. I was way off. So this poor thing went from 450 to 50. And it's bottoming here on the daily chart. So let's just use round numbers and say $50. We sold $40 puts yesterday into the close that expires this Friday. When you sell a put option, we take in premium and we have an obligation to buy the underlying at the agreed upon strike price on or before expiration. So we, today's Wednesday, yesterday was Tuesday. So we took in 70 cents a share, $10 lower. We said, yeah, I'll take your 70 cents a share. And I'm agreeing to buy RNG, ring, the underlying stock, on or before 3 days to expiration at $40. So if I'm obligated to buy RNG by Friday expiration, then my cost basis is $39.30. And I'm like, I'll take that bet. But we start with a bias on the charts. That was a bet that I was all over of a favorable risk to reward. Could this gap down to $20 and it go bankrupt? Of course. Every trade is about calculated risk. And our approach to trading anything starts with technical bias. All right, so that was yesterday. So let's go back to booking. This is not a pattern that interests me, but I had an email from a subscriber. He said, hey, Dan, what about selling what's called a short straddle? And so it means selling an out of the money put, and these were his numbers, 1,700, and then 2,200 call naked. That's what's called a short strangle, is the same at the money call and put. A straddle means you're going further out. And I say, Joey, look, I like the pattern, but part of our checklist is we only want to do this on liquid options. Now, McGraw and I, he's a seasoned, you know, trader in our green room. He and I do many additional trades that carry higher risk, particularly with illiquid options. But I don't give those official. I talk about them so our subscribers can say, okay, I see what you're doing. I like it. I'll tag along and take the risk. I won't be mad at you. And so McGraw, and that's going to be part of this discussion. So booking, I would do this short straddle that Joey recommended to me, but they're too illiquid. I will not do it. So here's one that's actually against me. Now, all my subscribers know I do not mind telling you when I'm in a losing trade, because if you don't admit being in a losing trade, well, then you're full of shit. So McGraw and I, on this day, it was not a great pattern, but we sold the 460s for $2.50 a share, naked. McGraw and I did it on our own. Now it's spready, so even though we have an open unrealized profit, we can't get out. So we're just got to sit with it. So again, I'm showing you this as an example of two things. This one went against me, and I'm still in it. and it's illiquid. So I'm not going to give our subscribers illiquid trades like booking. All right, so McGraw in the green rooms asked me right now, what about Expedia? So Expedia, I'm assuming McGraw is not an option trade, but see, so folks, this shows McGraw's prowess. You know, he owns a farm out here in West Broward, South Florida. He drives tractors. He has an amazing skills. And so Expedia, let me check earnings. Expedia, oh, is 8.4 also McGraw? Is it after the bell? Because I didn't see it in my list. So this, yeah, that's why it didn't show up on my list. But this is a pattern that I would consider selling puts. So the next question is, I have a pattern. Why is this a good pattern? Well, I know I got these 3 charts over here, but I have monthly, weekly that I just have a little snippet of, which is really not part of my decision making, except for saying how creamed it is. So this is a bottoming pattern, daily, weekly. It's gotten creamed from 210, down to 90. So next step in the process is, what are you going to pay me for taking the risk? The risk is the option put buyer buying puts either for protection or speculating on lower prices. And so we teach this in my credit spread seminars, of course. I'm not trying to hide anything here, but I'm just not going to turn this into a 4-hour seminar here. So what I do is I go to the option table, see if it's liquid, and I see what strike I would be willing to do. So $90 puts, $14.73 out of the money. The $90 puts that expire this Friday, 2 days to expiration, 93 by 100. And then it's up to you of your risk to reward of what premium do you want for your obligation to buy at that strike price. I'm going to go ahead and nibble here, and I'll do more tomorrow. I'm going to nibble on the $90 puts, 96 cents a share, filled. So I am in 90s, and I'll add more tomorrow. So even though this one's not on our list, it meets my criteria. Now, I'm going to probably feel some pain if Booking, which is a competitor, as McGraw saw, is reporting negative earnings. So this is also the tourism sector, right? So some other clues that we look at for tourism are what, McGraw? Tell them. Airlines, cruise ships. Look at RCL. Look, it's a bottoming pattern. I'll sell a put on this too. Is what else? Is C's. Look at C's, Greg, I'm busy right now, but look at C's. Buy this over to high. It looks fantastic. Big old bottoming pattern. Look at this. I'm going to put C's on my list. I don't know when earnings are. But anyway, the point I'm getting at, folks, is the travel industry, I'm seeing signs of bottoming. So yeah. Marriott too. Absolutely. McGraw, thanks. Yeah, so hotels. Look at Hilton, McGraw. So see, that's going on my list. So yeah, so I have a positive bias of travel stocks. All right, so I know I talked a lot about that. All right, let me come back to my earnings list here. Where am I? Started with Booking. Where are you, Booking? All right, Booking. All right, sorry, that was a long introduction. All right, Grimy. So Grimy in our green room is saying, Dan, do you check the index for resistance or pullback when you do trade in a stock? Of course I do. Of course, Grimy. All right, so Met Is this a pattern that I want to do a bull or bear credit spread on either selling options or buying options? It's not a great directional. Here, I'm backing up again, folks. Netflix down here, Netflix and Tesla were directional trades to us because of big old bottoming pattern. So I will tell you if I see a directional setup, this is not one. I don't know what this thing's going to do tomorrow on earnings, but would I be willing to sell a put option under the 20 MA, which is 61.42, or even a tad lower, 61? And the answer is what, McGraw? What's the answer to my question? All right, I know you got to type. The answer is, what are you going to pay me? What are you going to pay me for the risk? And how do I determine what are you going to pay me? You go to the option table. So that's what I'm doing right now. I'm going to 2 DTE 61 puts on MET, and there's no juice. So this is part of my checklist. The options are liquid, but there's no juice. Juice I call premium for accepting the risk. It's 10 cents by 25. I have zero interest on that. This one rallied to the top of the range, no interest. McKesson, no pattern, unless, because it's down 2 ugly days. Oh, look at that. Wow, look at the monthly. McKesson has been on a tear. So I have no interest in this unless it's far away at 315. So what are you going to pay me if I take this risk? Let me look. MCK. McGraw, I think I have us a trade. But they're spready is the problem. 315s. So look, 2 days of risk, folks, 215s. So Greg, you help me on this one. 315s down here, $1.75, 240. The 310s, 70 by 170. And so this is where I play market maker a little bit because I want more than 70. So 310s, I'm going to send an order out for 120 because I will take 120 for that risk. Filled. So now I'm in McKesson at 120. The 310 puts that expire Friday, which is 2 days to expiration. All right, so I'm in that one. What's the other one I did? Oh, I did Expedia. All right, let's continue. NTR, not a great pattern unless it's way down here. 77s. NTR, let's see if there's any juice at 77. Nah, 45, 55. Square. The problem is, Russell, so Square, it's bullish, daily, weekly, monthly, but it's up 7 bars far from the 20. So it's not, we're technical based traders. So that's not the time to sell a put spread unless you're saying it's like the 60s. No, I know, Russell, I get it. I'm explaining. Unless you can tell me I can get $1 for the 60s, which I find highly unlikely, then I don't have any interest. I'd rather wait till after the earnings. All right, oh, no pattern. Mealy, it's a nice bottoming pattern in the weekly, but it's also up a couple days. But particularly with some of these pharmaceuticals, let me see if there's any juice at 700. I'm looking and they, and, you know, another decision on these things is 2 days to expiration versus 16, that if they don't have weeklies. This one does have 2 DTE, but the problem is these 600 puts are zero bid. I'm sorry, the 700s are 70 by $1. And for a $700 stock to only get 70 cents, that's way too much buying power and risk for me. So let's move on. All right, LCID, look, you see, LCID, we, as an aside, folks, we're in, well, I keep thinking Roblex is an EV, but it's not. We're in core long Roblex. Look at that beautiful weekly. And Riven, look at Riven here, folks. Come take a trial to our advisory swing letter. This is a beautiful, intelligent entry to a core trade. So Riven, we're in. Riven looks van freaking tastic. So LCID is same sector, right? So I would be all over selling an $18 put here if there's juice, because it's a strong sector right now. 18, wow, McGraw, I just got us another trade. I'm going to sell the 17 and a halves, 2 DTE, 34 cents. Hey, I need Greg. I need help. Send this to our subscribers. This is one that I would take. This is a beautiful setup. All right, I put it in all 3 accounts here. All right. All right, so I'm going to give this to our subscribers. So, and then I say no stock, because then we'll deal with it as a stock. Greg, are you there? I know I'm talking a lot.
I don't think you should give subscribers any naked options.
But Greg, what's the difference of taking ownership? If we're core long, we hold over earnings and we sell call options into earnings. So it's identical risk, but that's fine. We can talk about it.
To explain it, there are too many novices, and
all right, we'll talk about it later, but it's identical to holding a core long. And I would hold this as a core long.
you still have to explain it to them.
All
Too
right,
many people willing to press the button and not know what they're doing.
all right, let's continue. I'm in it. All right, so Allstate, no pattern here. It's trying to bottom, but it's in a nasty downtrend. ET, no pattern. It's extended. No, Allstate, I wrote that twice. ET, I wrote it twice. eBay, no pattern, extended. SLF, no pattern. So when I say no pattern, it just means that I'm not interested in doing a pre-earnings trade. These are still on my list tomorrow to see what happens after earnings. Let's wait to extend it, doing nothing there. Clorox, nothing. R Romeo, nothing. FLT, there's a gap breakout. I would do one on that. Daily, weekly, bottoming pattern. So now I go through my checklist, see how far away I can go and what am I going to get paid. There's no weeklies. So this one's 16 DTE. And the options are too spread. So that vetoes this one. Like the 200s, for example, are 120 by 380. Now this is where I'll take risk that I'm not going to give my subscribers. So 120 by 380, I'm going to put an offer out there for 220. I'll take that. That's a risk I personally am willing to take. because then I own the stock at $198 and change. But we're very adamant about our subscribers only trading liquid stocks because it's higher risk. I'm like in 7 or 8 of these things that I can't get out of because I'm dealing with wide spreads, but that's not what we teach. It's what McGraw and I do kind of as an advanced strategy. All right, so Berman, my question is, how far can I go down? And the 80s are 45 by $3. The 75s, 25 by 1 1/4. So I personally am going to set an alarm, not an alarm, I'm going to set an order to sell options at 115 because I will take it. I will own this stock at $73 and change. But it's too spready. ATO, no pattern. MRO, no pattern. TPL, no pattern. And light volume, you're hitting the delete button. MGM, that's a no-brainer pattern if you can get far enough away. So let's try the 31s. So this is the option table is what I call the juice bar. And the juice bar is only 10 cents. So I have no interest in putting on a trade into earnings for 10 cents. You're out of your mind. GoDaddy, that's a big old bottoming pattern. So let's see how far I can get away. I would do the 70s, maybe 70s or lower. They have no weeklies, so I would have to go 16 days. McGraw, the 65s, 45 by 50, 67.5, 70 cents. I'm going to hit the 65s. I'm going to hit the bid at 45 cents. So I'm in that trade now. GoDaddy. The 65s I did way down here. So that means I would own the stock at $65 less premium received. OBV, no pattern. Lily, no pattern. Baba is Chinese. I'm not messing with you. COP, no pattern. CI, no pattern. But this is one, whether it gaps up or down, then I would trade in that direction. Do you see that? I'm range bound right in the middle. So if it goes up, 30-minute high, if it goes down, 30-minute low, I will trade that either direction. No patterns, ETS. Duke, it's a mess. BDX, a mess. Fizz, no pattern. ICE. We put this in our weekend letter as a 1, 2, 3, a quality 1, 2, 3, and then it never triggered, so I canceled it. Yeah, but McGraw, the problem is there's no juice on this one, but this is an absolute no-brainer pattern. And when I say no-brainer, I got to keep emphasizing this. It doesn't mean the thing can't gap down $20 and then you're seeking psychological counseling tomorrow. It means the odds of this is so bullish right now that I would be willing to short a put if I get paid for it. So McGraw, the 95s, 16 are only 45 cents. That's not enough juice for me. Juice is premium. I want juice to take the risk. TRI to extend it, APD, no pattern, SRE, no pattern, BCE. I would do the 48s. Let me look. There are no 48s. 45s are 0 by 20. So move on. JCI. That's extended. PH extended. LNG extended. These would be better call spread candidates tomorrow under this base. No pattern. D-dog. Big old. You know, I would do the. Let's see. It's not a good pattern because it's run so much from the bottom of the range to the top. But just for the fun of it, let's see if there's any juice at 85s. 85s, 22, 24, zero interest on 22 cents. Hey, Fer, we're almost done here, Fer, and then we'll go through them. But no, of course, you know, I'm in no hurry to get in. That pattern I like. This pattern I like. Big bottoming pattern is above the 2050, bottoming tail, closing at the high. This pattern I like. So here's where I say, let there be juice. There's 16 DTE. McGraw, the 67 and a halves are 55 by 90. So they're spready. So I'm gonna set an alarm. I'm not an alarm, an alert. 75, no fill. So I'm gonna change it now to 70. See if I get filled. No fill. He's not filling me. So I'm trying the 67.5 right down here, and I'm not going to chase. So I'm just going to leave it there. But that I like the pattern. Oh, and then I'm even at the 65s are 25 by 55. So I'm going to play market maker and I'm going to send an alert at 50 cents. And see if I get lucky. I'm going to put this in all three accounts. If I get filled 65s at 50 cents, I will take it. All right, done. All right, we're almost done here, folks. VMC to extended, power, no pattern, RPLX, no pattern. EPAM extended, but look at the weekly. I mean, the only problem is I'm not going to get juice at 310 after it's rallied from 310 to 368. But let's say hypothetically, it was 340 right here on this day right here. I would be all over this setup right here. I'm just looking anyway for the fun of it. 270s, maybe I play market maker. McGraw, you know, take a lot of buying power, but you could you can hit the 250s, McGraw. 250s are 55 by 65. I mean, it's a huge amount of buying power. Right. It's a huge amount of buying power, but there's a bid there at 55, which is not bad. I mean, look, 255, that's $119 lower. Wow. Put that on my list for tomorrow. All right, here's a bottoming pattern, no volume though. Look, Para, no volume. Seg to extended. Oh, there's our Expedia that we did. All right, I already ended. Wait, why do I have Expedia? Oh, you all gave it to me as well. All right, never mind. All right, C's. I like this pattern. I would do it under this prior low. Even this tail is so 45 or lower. We'll do C's. Whoa, McGraw, look at the juice on this. McGraw, the 40s, 50 by 70. I'm set. I just sent an order for 50 and I'm not filled midpoint. I mean 60, my bad. It's 50 by 70 for the 40s. Wow, that's juicy. I like that. All right, so I'm putting orders out right now for shorting the $40 puts. All right, filled. All right, so I'm in C's. McGraw, you better make sure you didn't put a wrong order in because I saw a 55 bid and I hit it. Are you sure I didn't sell to you and you bought them? And you just did a massive little faux pas? All right, but this is, so look, folks, this is a pattern I will sell puts on into earnings. It's killed. It's killed, down from 75 to 40. It's a bottoming pattern. Now, does that mean I can't get my clock cleaned and it opens at $30? Of course not. But I'm just showing you this strategy of how I do it into earnings based on the charts. So this is a beautiful one. Now, earnings are not today. Oh, it's tomorrow. Okay, so after the market though, because it wasn't on my list. All right, so any questions? Greg, we're on YouTube. You want to add anything before we terminate it?
I was just typing in there telling people the risk and the obligation to buy at 40, but what I was going to continue typing was that even if it gaps down, those options are going to get crushed. So if it bounces a little bit, they can expire pretty fast or be, you don't lose significant money. So some of these things that you've done, even though it's gone against you, they haven't been losses because of the one you mentioned this morning. I think the volatility crush, even though it gapped up significantly, it was still profitable.
Absolutely. No, that's happened. I need to track these so I have better statistics because I don't like bullshitting. But so McGraw, help me. Of the 25 that I've done in the last 3 weeks, I would say, and this is just my best guess, you all. I don't mislead. No, that's not what I'm asking. No, I'm like 90, 95%, 90, over 90. My point is not my point, my question, how many gapped against us and we still closed them at profit? That's my question. And I would say probably, I would say 25% would, no, not half. Okay, 25 to a third. Okay, I'll go with that answer. 25 to a third, even though I'm making solely my decision based on the charts, went against us. And I still got out of them at profits. Yeah.
And what I was typed into YouTube before to explain to everybody was that the reasoning behind this is that those option premiums are so high because of the earnings coming out and the considered risk that even though they're gapping against you a certain amount, if prices retrace as they normally do, even on a big gap, those options are going to lose their value rapidly.
All right, so Greg, here's one, as you know, we gave 2 days ago. So here's an example of what you just said. This, we did a condor, which is called It's a range bound strategy, pins into earnings. We sold 26 call spread. And we sold 14 put spread. You make your max profits, which is a premium received, if it expires Friday at 4 p.m. between 16 and 24. This thing had a massive gap against us because freaking Elliott management came in and started pounding the table on it. Guess what, folks? Despite this thing going from here to here in our face, we closed it out at like 65% of max profit because of the volatility contraction. Now, if it opened up at $30, then, you know, we got a big old friggin' loss on our hands. Well, not big old loss because we had a $2 wide spread. So we would, you know, we would have had a loss, less credit received. But since Greg was just making those comments, that reminded me of that was a good example that it went way against us and we still made money. Airbnb went way against me today. Look, I sold this thing at 117 and it went to $9 lower. And I got out at 50% of max profit. So, all right, so that's it. So I think we'll, you know, we do this every day in the green trading room. Come check us out. Spend $7, take a trial. But we trade stocks, options, cryptocurrencies. We picked up a couple cryptos today. We did Block. We did Riot. You know, both look good. Daily, weekly. All right. Any other comments, Greg? I need to shut them down.
No.
All right, YouTube, have a great afternoon. See you in the morning, 9 o'clock every day. We have pre-market review.